Hello traders, welcome back to the channel. This is Jonah with Trading the Charts Pro, and guys, today I'm here to talk about what happened in the market today because it's very important. All right guys, so we're gonna jump into the charts and we're gonna break it down, and I'm gonna show you how you should be thinking on your next move. All right, so let's go. Alright, now guys, when we look at the chart today, everybody felt it. If you're a swing trader, you felt it. If you're a day trader, you made money because you were shorting the futures market, just like myself here. So what is the next move? What actually happened today? Why I'm making this video in the midweek talking about overall market direction. Well guys, in the last outlook that comes out on Saturday, we talked about the market trend. All right, so the market was trending, it's still moving up, yes, but we were trending, holding the 10 and the 20 EMA as support, and we said as long as the market don't close below the 10 and the 20, then the uptrend will continue. What uptrend am I talking about? Well, this very tight uptrend that we were moving in right here. It doesn't mean that the market is gonna go down. What happens from here is that you guys can see the market didn't stop pushing until it gets down to the 50 EMA. Why does this matter? Well, it matters because when the market opens tomorrow, if we don't bounce off the 50 and start moving back up, which I don't think the move back up is gonna be so swift and so fast, I do think that we have to start becoming a little bit cautious here, guys. Why? Because we had this very nice run from November. Every day, we're moving up, continuously moving up, and now that short-term trend has been broken. We have officially closed below that level. So now tomorrow what we got to look for is, do we get a continuation of selling? And if we do get a continuation of selling, where is the market gonna go? There's two ways that we can start looking to see what's next. This is where we pull out our Fibonacci tool and we just take it from this last move, technically the breakout level here, because what we're looking at is the move itself, and we want to see, okay, if the market is going to retrace, what are some of the possible levels that the market can retrace to? Right, typically the market likes to retrace per move. If it's going to continue up, or even if it's going to continue down, it likes to retrace and then make a second move, and then we will know the next direction from here. So basically what I'm saying is that if we're going to continue going up, the market will retrace roughly into the 50 or the 60% level. Where are those levels at? Well, we can see the numbers right here. If we get a 60% retracement, we're looking for the market to come down as low as 3,649. All right, that's the low level. Medium level, 3,689. All right, so roughly we're almost at the right at the 50 EMA is the roughly 50% retracement. So yes, this is the first level, all right, that the market needs to hold. If that level doesn't hold, which is the 50 EMA, then we're looking for it to push down just a little bit more into this 3,650 level, and then we should get a bounce from here if the market is going to go higher. Now, how high will this bounce go? Is the market going to continue come all the way back up here? Well, when we get more information, we're going to know. What I do mean is that when we come down here, if we break the 50 EMA, the market can come back as high as this level, and then from there we can potentially get another move to the downside, that actually takes us, you know, right back into the old resistance level, because we haven't come back and test that level since we have broken out. All right, so as far as futures, this is what I'm looking at. Tomorrow I'm gonna be watching the market to see if I can find some short opportunity in the event that, you know, this market continues to move lower. On the hourly chart, we have already broken below, you know, the 200-hour moving average. We have a downtrend in place inside the hourly chart inside the S&P 500 E-mini futures. All right, so that's how I'm looking at that. There's one more thing that I wanted to bring to your attention, guys, is that today, you know, we saw massive move inside the VIX, and we already know that the VIX move inverse of the market. So to come tomorrow, we have to watch this very cautiously, because if the VIX, you know, continue to spike, that means that the market is going to continue to move lower, and, you know, a little bit lower. I'm anticipating that, you know, this VIX only come as high as $40, $43. You know, that's still roughly, you know, another $7 from where it's currently at, and hopefully from that level, you know, we will start slowing back down and get some calm, you know, movement from here to the downside. So I just wanted to pop in here, break those down. But let's take a quick look at, you know, the Nasdaq, see what the Nasdaq is doing. The Nasdaq is not as bad because, you know, yes, we did break the, you know, uptrending resistance that should have been support, but we are technically right into the 10 and the 20 for the Nasdaq. So this is a good place to see, you know, do we get a bounce right here and we continue to move a little bit higher. I'm a bit cautious because of the amount of volume came in on the sell-off today. It was a sell-off on high volume. So tomorrow, guys, we have to be extremely cautious to see, do we get a continuation and a confirmation that, you know, this selling is going to move lower. If it goes lower, as far as tech, I'm looking to see price come back roughly, you know, 12,700 thereabout, and from there we should get a bounce, and then we will know more into the last 2 days as to where price action will move to for the next 2 days. All right, if we look at the Dow, let's see, you know, what is the Dow telling us, guys? In the outlook, we were a bit cautious with the Dow because we see that the market was flattening out up to the top here. So because of that, you know, we really needed price to hold this uptrending resistance that would have been support, and from that level, that would have give the market a little bit of boost to try to break out. But you see, we broke that level, and now we actually break the uptrending support. On the Dow, we broke the 10, we broke the 10, the 20. Now we are at the 50. Okay, so we have to see what does this market do from here. This pullback is pretty good, you know, in assuming that you took some profit on these swing trades, is a great opportunity to get ready to go again when some of these stocks pull back, taking them from their all-time high to some good levels that we can go in and ride them up again. All right, so guys, if you did find some value inside this quick video, you know, I'll see you on the next one. Thank you for watching.